Hello and welcome again to Money Tips. This is Charles Kelly bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. Thank you for everyone who is tuning in on Facebook Live. Great to see you all and thank you for joining me. And let me just get this here. Lost you now. Right, got you back there. Okay. Thanks for tuning in. This Friday now, and we're officially sort of coming into the end of summer. It's coming into autumn now in the UK, getting a bit colder, but it was still a beautiful sunny day. I was up in London, walking around in Regent's Park at one point. Beautiful day, and the week has ended quietly compared to what it was. It was a turbulent and tumultuous week. Shares earlier on in the week recovered after last week's fall on the China trade war with Trump, but I don't think that's over. I mean, they've recovered back now because they feel that Trump and China are going to settle things. But don't forget, Trump put tariffs on, China come back, Trump come back, and China went in again and put tariffs on. And I don't know whether China will now settle it, or they're going to sort of, like the poker game, say, well, I'll raise you again, because China definitely want to. They're in the mood to sort of dominate the world. You can see everything they're doing is moving towards world domination. This Silk Road they're building all the way to Italy, taking over islands in the south in the South China Sea, which they think is all their territory. They believe that's all their territory. And then what about the 13-mile rule, and then the rest is international water? They're acting like it's their territory. They're putting weapon stations all over the place, and they've taken over islands in the Philippines, just marched in there or sailed in there and taken them over and ignored rulings from The Hague, and the president there is powerless to do anything about it. They've taken over islands in Vietnam, and they're in disputes with other countries. So just watch China, and Trump is the only one who is standing up to China, despite what you might think of Trump. He's not an idiot, and he is saying, look, enough is enough. The West has got to balance things out a bit. We've all got to prosper. It's not it should be a win-win, not a win-lose or lose-win. So having said that, China's economy and India's economy are slowing down, and the sectors look to be over-geared. Property sectors are heavily geared. There's lots of borrowing going on, and now India's got a lot of developments that are having to be stopped because they've run out of money, and I don't know whether this could cause another banking crisis. We shall have to see how that works out. But in this week, Boris Johnson, the Prime Minister of the UK, prorogued Parliament. He suspended Parliament or closed Parliament down. I think we most of us have learnt a new word in the last week or so. Prorogued Parliament, causing a storm of protests. People are out on the streets in London, in Manchester, in Belfast, in Glasgow. They're going to court to try and stop it. But what it actually means is that Parliament will be closed for an extra 4 days. It would have been closed anyway for it's closed on the summer recess. Then it usually closes for the party conference season in early October. So it would have been closed anyway, and it's been closed for another few days. But they feel that he's doing this to force through a no-deal Brexit. On the other hand, the Remainers are plotting to stop the UK leaving without a deal, even though when they had a deal there, they voted against it 3 times, and really they just don't want to leave the European Union. So we'll have to see how that one plays out. A couple of surveys have come in this week on consumer confidence and business confidence, and they're not looking good. Business confidence is down, consumer confidence is low, and consumer spending and borrowing is down. Other surveys have come out. The Nationwide Building Society survey, their regular survey, reports that property prices in the UK are barely moving. They're just about growing, and in many parts of the country, like London, properties are actually falling back. So the economic signs are not good, and I'd say it's not a good time to take risky borrowing on, or certainly it's not the time to rent a shop for some silly franchise for ice cream in the high street, because you're just going to lose your money, particularly in a country which has about 10 months a year of rain and cold weather. I don't understand why people open up ice cream franchises, because they don't really last very long. That's just a bad example, actually, and good luck to you if you've got an ice cream franchise. But I just see people renting huge shops at 50, 60,000 pounds a year, you know, and I look inside the shop and I can't see many customers there, so I don't know what they're doing. Now, on the other hand, office property in the city has been snapped up despite the doom and gloom about Brexit. For some reason, you know, companies are renting offices in the city, despite what they told us. They said once Brexit's announced, everyone will leave the city. They'll all go to Frankfurt, they go to Paris and all that sort of thing. But is it happening? I don't think so. I think the city will still survive whatever happens. And, you know, if markets do go down, if markets fall, that's the time when it will be a buyer's market for property, businesses and shares. Now, talking about shares, my word of the day is PE ratio. Sometimes stands for, or sometimes called PE ratio or price earnings ratio, PER. And what it is, it's the ratio of a company's share price in relation to the company's earnings per share. The ratio is used in valuing companies and to find out whether they are overvalued or undervalued. So if you look at a company that has a fairly low PE ratio, say 8 or 9, that's pretty good. But if the ratio for a very popular share like Apple or Microsoft, it could be 30 or 40 or 50, you know, so that would be quite a high ratio, making the share look expensive. This is just one way of calculating at a glance whether a share is worth buying. So I'll give you an example. If share A is trading at £24 and the earnings per share for the recent 12-month period, the previous year, is £3, then A has a PE ratio of 8. That's 24, the price, and divided by 3, which gives you 8. So put another way, the purchaser of the share is investing £8 for every pound of earnings, right? So you got that with me so far. Earnings is like the profits, although there's different ways of calculating, but that's just the earnings per share. So companies with losses could show a negative PE ratio, usually shown as just not applicable. So it's a way of, and 8 would be a fairly reasonable PE ratio, but we're seeing companies with very high PE ratios at the moment. So when you look at a company in a listing in the Financial Times or something like that, look for the PE ratio of the company. So, you know, if we look at companies like, I don't know, let's try and just look up Apple share price and see if we can find out something about their share price. I can't find it at the moment, but Apple share PE ratio. So the Apple share PE ratio here is showing at 17.41 at the moment. So that's quite a high PE ratio. And I think we've said on this podcast before that the shares at the moment we feel are overvalued in terms of their, you know, what they're really worth, their real true value, because the markets can be irrational and the markets have been going up. There've been a few dips last week, but I think shares are overvalued and they're due for a big correction. So it's a good time to learn about how to invest in shares, and you can do that through reading books, through courses, and you know, or attending seminars, or just reading about it. You know, you can get so much online for free now, or you can attend a formal course. But I think shares, you know, the stock market is a good investment if you know what you're doing. If you don't know what you're doing, you can invest with funds, but the funds like unit trust and mutual funds, you know, they haven't been performing that well, and their charges are quite high that they levy on you. I've talked about that before. The best way is to learn about it yourself, or just go into a tracking fund that tracks some of the indexes that we talked about a day or two ago. We talked about what is an index. So, but as always, you know, learn how to do it properly, or seek independent advice, because I'm not your financial advisor, obviously. So you've got to learn how to do it yourself, or go and take advice. But you know, the stock market and property are two of the main kind of investments that people put their money into. It's the main thing that pension funds invest in. So it pays to understand it, even if you're not directly investing it. Your pension fund could be in the stock market. So it pays to learn about PE ratios and how a company is valued and what it earned last year and how much debt it's got. These are all factors that would make a company worth investing in or not. Okay, so that's all for now. thanks for listening. I hope you have a great weekend ahead. And I hope next week things will settle down, and we can get this Brexit business sorted out one way or the other for the UK, because we really need to get back to normal and get back to normal business. Apparently Parliament this is the longest session of Parliament for 400 years. I think it's sat for nearly two years now. We haven't had a Queen's speech in 2 years. A Queen's speech would be where they lay out the year's business ahead. The Queen reads this speech that's written for her, but she would lay out, my government will do this, my government will do that. Well, we haven't had one of those for 2 years. So although they're talking about proroguing Parliament and taking away 4 days, actually it's been sitting for 2 years, almost non-stop apart from the summer recess. So there you go. Thanks for listening. This is Charles Kelly, bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. Thanks to everyone for tuning in. I can see Andrew, Joe and lots of different people there. MD Seville, thanks for listening, and have a great weekend.